Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn what is a flip entry module, and this is our next part of the entry module and how you can apply in a lower time frame and how we can identify and what criteria you should follow before the buy and sell. Generally, we use chalk entry module, flip entry module, and next one is a sweep entry module. So basically we are using three entry module. First one is a chalk and next one is a flip and third one is our sweep entry module, which will be applicable when market taken out the liquidity. If market taken out the measure high low, previous candle high or low, structure high or low, then how you can sell in a lower time frame I will show you in the next part. But in this part we are going to learn what is a flip entry module. So this is our putting all together video and everything will be mentioned higher time frame to lower time frame and how you can identify PY, and then when market tap on PY taking out the liquidity, then how you can switch into 1 minute time frame before the enter. So first of all, you have to understand what criteria you should follow in a lower time frame, in M1 time frame, in M5 time frame, because it's depend on you that which time frame you are looking for the higher time frame. If you are using 15 minute, then you have to switch into 1 minute for the entry time frame. If you are using H1 for the higher time frame, then you have to switch in a 5 minute for the lower time frame. So first of all, look at this. This is our first diagram at this point. When market tap on your PY zone, this one is your higher time frame PY zone M15, right? And maybe price taken out the previous low liquidity in a bearish market, and this is our bearish market. And then what happened here, and this is an internal structure, right? Overall structure is the bullish, but market tap on your PY zone, and this is our lower time frame bearish structure. Once market tap on your PY zone, then what criteria you should follow? Generally we use when market break the first recent high low, that's called change of character. Same thing will be applicable here, but before to confirm this change of character, you have to understand this low, how this low closing here. For example, this one, right? If market break the recent low, which one is here, and broken this one, because this low is a mitigate here at this point, and if this leg close below it, just previous low, right? So this become our candle closer, right? So how you can take here, when market tap here and close below it, it means liquidity not taken out, then you have to wait for taking out the inducement before the enter, right? Generally we use in a change of character entry module also. But if price not close below it, just sweep the liquidity. If price not close below it, just sweep the liquidity. It means liquidity already taken out. We don't need a wait for inducement before the enter, right? So basically this is a meaning before. So basically you can identify like this, okay? So same thing happen here, market close below it and market tap on your PY zone, then how you can take entry. And you don't need to create entry model yourself. You have to wait for to create this. Sometime you will see direct change of character entry, sometime you will see flip entry. So when price tap on your demand zone is here, and then where is our supply zone? I'm talking about lower time frame. So this one is our unmitigated order block at this point. If market give any small reaction is here and then push higher, so this one is a called flip, right? But if price not create any supply zone, and maybe if price not create any pullback is here, directly breach to the upside and break this one, so this one is a called change of character, correct? But sometime what happen, market respect some order block is here and then get a small reaction and then finally break, okay? So this process is called entry. It means tap on your supply zone and create a demand zone, because when market break to the upside and then create a valid order block at this point, and this process is called flip, okay? Means supply convert into demand, and you can say S2D, supply to demand, right? So this is a process to identify flip. But how you can enter here in a lower time frame? Simple. You have to understand if market already taken out the liquidity at this point, right? In this case not taken out the liquidity, it means you need a inducement before the enter at this point. So where is our inducement in this leg? You can see market create this small demand zone at this point, and a lot of people are looking here for buy directly at this point like this, because this supply convert into demand and they are anticipating price tap here and they are looking for the buy. But this is not a correct. Why? Because market not taken out the liquidity or inducement. If you are buying or selling without inducement, without liquidity taken out, it means you are SMT. Simple. So in this case, this demand zone is here and you have to wait for it. Once market taken out this one, and then you can buy here on this extreme order block, which one is here, right? So this one is our high probability order block here for the buy, and sometime you will see if there is no order block on extreme point, which one is here. So this demand zone act like a inducement, correct? If this low sweep here and you can buy here as per single candle order block, as you know. So this is the first scenario when you can take entry for the buy. And next possible scenario is happen sometime market create this small demand is here. Okay, this is a supply zone and this one is your demand zone, in which case you can buy here. Okay, so first of all, if candle close below it, everything is a bearish, okay, in the lower time frame, and then turn into bullish. First reaction is here, give a small reaction, push higher. Okay, so if market create inducement at this point, something like this, and create inducement at this point, then definitely you can buy. This is inducement and buy below it, and this one, right? In this case, you can buy here at this, taking out this inducement, definitely you can buy here. If there is any unmitigated order block, you can take also when buy entry is here if failed this setup, right? So main thing is here, if market taken out the inducement, then definitely you can take a buy entry. If market taken out the liquidity, then you should take entry. If not taken out any liquidity, if not taken out any inducement liquidity, then you don't need to enter there, right? Simple process here. Now let's switch into next diagram, which one is here. So at this diagram, same thing happen here. Market tap on your order block, which one is here, higher time frame order block, PUI, and liquidity taken out, whatever. Okay, so when market tap here and then give a small reaction at this point, and this one is a liquidity sweep, right? In this case, market sweep the liquidity. So once market sweep the liquidity, it means liquidity already taken out in a lower time frame, and you don't need to wait for inducement before the enter here. Okay, so what happened here, market tap on your supply point, which one is here, and this one is our lower time frame structure. So market tap here, give a small reaction at this point and convert, go to higher. Okay, and sometime you will see market not break this high, and sometime you will see market just break this one. Okay, this one. Okay, so this one is also indication that this supply is not valid here. Why? Because market break this one, okay, this high broken, it means you can also buy here at this point immediately, and you can buy something like this. But this scenario will be applicable when market sweep the liquidity at this point. Okay, if not liquidity taken out, then you have to wait for break this one. Okay, continue, break this one, taken out the inducement, tap on your unmitigated order block on extreme point and go higher. So this scenario will be applicable here. So first of all, you have to wait for, you have to check if there is a candle closer or just taken out the liquidity. If taken out the liquidity, then you can directly buy here. Okay, like this at this point, simple. Okay, you don't need to wait for inducement at this point. If market not sweep the liquidity, then you have to wait for taking out the inducement, something like this, and go higher. So generally we can buy after taking out the inducement, after taking out the liquidity, and this is a complete process is called flip entry model, and this one is also known as a chalk with flip, right? Because once market create a flip, then also create a change of character at this point, because this one is our change of character. So when market create a flip, then also create our change of character like this. Okay, so this one is a called flip up with chalk, or you can say chalk with flip entry module. If market break this high directly at this time, okay, so this is not a flip, this is our chalk. I hope you understand how chalk flip entry model is a work and how you can apply in a lower time frame. And same thing will be applicable in a bearish market. If market is a bearish tap on your PUI zone, then how you can take entry, and same thing will be applicable. Let me show you exactly. In the bearish side, you can see here same thing will be applicable here. When price tap on your PUI zone is here and taken out the previous measure high or low as a liquidity, and then you can switch in a lower time frame and sell based on the chalk entry model, flip entry model. So what happen if price break this high, and this is our lower time frame structure, and broken this one, and after broken this move and candle close over it, because this one is our mitigation move, which one is here, right? So this one is our mitigation move, right? So this candle close above it, right? So it means liquidity not taken out lower time frame. Then you have to wait for taken out the liquidity, which means taken out the inducement, then you can sell here. Okay, so what happened here? Market push higher high and mitigate this one, and then what happened? This is our order block at this point. You will see in a lower time frame must be a valid lower time frame order block at this point. if market give any small reaction at this point, maybe one candle, maybe 3 candle, 4 candle, it doesn't matter, right? And then market break this one. So once market break this one, it means market create a flip. Why? Because this demand convert into supply, okay? And you can sell here. So how you can sell here? You can sell here in a two way. First one, if market break this supply zone and mitigate your extreme order block, which one is here, and you can sell here in. And the next possible scenario is here, if you are willing to sell here. And next possible scenario is here, if market not push higher and not mitigate your extreme order block, then when we can sell? We can sell here, like this one is our supply zone and market create inducement is here, okay? This is our demand zone and this become our supply, right? And this become our inducement at this point, and simply market tap here and then you can sell here. In this case, you can sell at this point. You don't need to mitigate your extreme unmitigated order block, which one is here. If market tap here, which is also fine, but very highly chances market gives you reaction at this point, okay? If everything is mitigated here, right? So this become our very high probability PY for this. This become our very high probability zone for the sell in a lower time frame, correct? So this one is our first scenario, when market candle close above it and mitigate your extreme high probability PY, which one is here. And the next possible scenario is here, if price tap here, taken out the previous measure high or low, tap on your unmitigated order block, and maybe this can be your inducement in a higher time frame, something like this, okay? So this can be inducement, tap here and then push downside in a lower time frame, right? So this is our PY when market tap on your PY, which one is here, right? So this move you have to understand, if candle close above it, if not, if candle not close above it, just sweep the liquidity, something like this, okay? And tap here and give a small reaction and push downside, correct? This demand convert into supply. It means you can sell here at this point and put the stop loss just above it, and for safer side you can put the stop loss just above it, right? And why this is our valid for the sell? Because market already taken out the liquidity. This move already taken out the move is here, correct? So this become our valid entry at this point. In this case, market candle close above it. That's why we need inducement, and this supply, this flip act like our flip, act like our inducement, correct? So same thing happen here. Market already taken out the liquidity. Then market taken out the liquidity, then you don't need to wait for to create inducement. If market create inducement, something like this here, which is also fine, then you have to sell only this supply zone, not here. Why? Because this demand is here and market keeps reaction at this point. So you have to sell at this point, not here, okay? Sometime you will see this type of scenario also. So you have to keep remember in your mind, you have to sell at this point, which is also valid entry for the. And this is a process to flip entry module, and same thing will be applicable here. Chalk with flip entry module, chalk with a flip entry module. When market tap on any recent PY, which one is here, I'm talking about lower time frame, and give small reaction, and then most of the time they create our flip, right? If market directly breach this zone, not mitigate here, simply break this one. So this one is called our chalk entry module. There is no flip, correct? And you can also sell here, and you can also say D2S, demand to supply, demand to supply, okay? Now switch into the real chart, then you will see that how you can trade in a lower time frame and how you can identify in a higher time frame. So this is our all putting all together video, complete process to identify PY and then fit for lower time frame, and then how you can take entry. So this is our complete putting all together video. So this is our complete putting all together video chapter, okay? So let's see.